Global energy markets are undergoing an unprecedented transition. The economy is switching fuel sources, ditching carbon-emitting and climate change-causing fossil fuels for cleaner alternative energy sources like renewables. This energy transition won't happen overnight. It will take decades and trillions of dollars of investment to decarbonize the economy. Hi, I'm Des with the Motley Fool. I spoke with Matt DiLallo about the top 3 energy stocks for 2022 and beyond.
So I really like Brookfield Renewable, Enbridge, and NextEra Energy. Brookfield Renewable is kind of like the global leader in hydroelectric power, but it also has a growing wind, both onshore and offshore, and solar, which is like rooftop solar and utility scale, those big solar plants. So it's got a little bit of everything, even energy storage. So it's a great kind of base company to own for, this transition we're going in. It sells this power under long-term contracts to like utilities and big power purchasers. Like, for example, Amazon is a company that buys a lot of power from Brookfield. And these contracts generate a lot of steady cash flow for Brookfield, and that gives it money to pay a dividend and also to invest in building new power plants. So it has this enormous pipeline of development opportunities that it expects to invest in over the next couple of years. Lots of hydroelectric plants, solar is a big focus of Brookfield, offshore wind farms, so a little bit of everything. And they expect that higher power prices and these development projects will grow their earnings by 6 to 11% per year for the next several years. And then Brookfield also has a long history of buying companies that operate these type of assets, and so they think that if they can continue to make acquisitions, they can boost their bottom line by another 9% annually. So if you add that up, that's 20% annual earnings growth, which is really, really good for a company that's very stable, solid company. And they're also going to be paying a 3% dividend yield, which they expect to grow by 5 to 9% per year through 2026. So you're looking at a very stable company that pays a dividend, a growing dividend, and it just makes it a good, solid play for this energy transition because it gives you a little bit of exposure to everything. The next company I want to talk about is Enbridge, which is a Canadian energy infrastructure company. They're actually the biggest oil pipeline company in North America. They supply around, I think it's 2/3 of the oil that comes into the country. They're the ones that's going through their pipeline. So a very stable business again. And I know what listeners might be thinking, oil, that's going away, but we need oil in the United States. Cars continue running gasoline, so this is going to be a very stable business for many years to come. And what Enbridge is doing is they're taking the cash flow that these businesses generate and they're using it to build more cleaner energy infrastructure. So natural gas pipelines, renewable energy. They're actually really big in building offshore wind farms in Europe. Enbridge expects these investments to be able to grow its cash flow by 5 to 7% annually through at least 2024. And then they also pay a big dividend. Like I mentioned with Brookfield, these assets generate a lot of cash flow, and Enbridge can use that to build expansion projects, but also pay dividend. In their case, 6%, which is very, very high in this market. And it's due because investors they're afraid of what the future holds for fossil fuels. But Enbridge is transitioning slowly because they have a lot of time, and so they can use this cash flow these businesses generate to grow these businesses over time. They're also investing in new things like hydrogen, carbon capture storage. These type of things could grow in the future. So great energy transition stock because they're delivering the fuels today and they're also focused on the fuels of the future. Now the last one is NextEra Energy, which is it's a utility. It's one of the cleanest utilities in the country. They operate Florida Power and Light, which is the biggest utility in Florida, and then NextEra Energy Resources, which is combined. It's the largest producer of power from the wind and sun in the world, and they're also a leader in battery storage. So you have a steady utility business that's very clean, and then another business kind of like Brookfield Renewable, focusing on owning these type of renewable energy assets that they sell the power to other utilities and end users. So very cash flow stable business, and they use that money to like the other ones to pay a dividend and then to invest in new infrastructure. They're expecting 10% earnings growth in 2022, 6% to 8% growth 2023 to 25. So very stable grower. You're not going to hit a home run with these type of stocks, but they're good for so much of the uncertainty in the energy sector. And NextEra is one of the leaders in this space, and I expect them to continue to lead into the future.
Why is a long-term mindset important to have when looking at these energy stocks?
So energy transitions take decades. A lot of that has to do with the cost. So wind and solar are a lot more expensive, or had been a lot more expensive. The costs are coming down than to build a coal-fired power plant or a natural gas-fired power plant. The other issue with wind and solar is intermittency. The sun isn't always shining, the wind isn't always blowing, so you can't rely on them like you can a coal-fired power plant, natural gas-fired power plant. So they have to build battery storage to kind of back them up, which is expensive. Even though battery storage is coming down, it's still expensive. And for other type of fuels like hydrogen that I mentioned, we need some more technological innovation to bring the cost of these things down. So it's just going to take so much time because we can't rely on renewables right now, that it's just one of those things where we have decades where we're going to still be using fossil fuels. And so it's one of those things where if you have a long-term mindset, you can say, okay, in the near term, fossil fuels are going to play a vital role, but clean energy is in the future. And that can put you into these type of companies that are going to kind of invest in both in a sense. And then if you look at what's going to happen over the long term, the real million-dollar question is, what is the future of fossil fuels? Are we going to still be using oil in 50 years? There's some oil companies, for example, firmly believe that we're going to, because they think that they can unlock carbon capture and storage. So oil produces carbon, which is a greenhouse gas that is causing climate change. Well, if they can capture that and store that, then oil isn't such a problem. The big question is, can they do that, or will these alternatives come out and be a better fuel source in the future? So as you're looking at the long term, you're trying to decide what to do with all this uncertainty and information. That's why I really think infrastructure is the best way to play this, because these businesses generate a lot of cash flow in the near term. They can use that to invest in transition type assets, and I think investors with the dividends and the growth, you're just going to get a nice stable return, and that I think is a better option than trying to, for example, invest in an oil and gas company or solar power, solar panel manufacturer, where there's just a lot of volatility and uncertainty about the future.